You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. So be sure to check out our live stream via the Mixlr app, or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. Learn more about QuickStrike at bantix.com. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. Visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO, This Week in Futures Options, a program where the name says it all. We break down the week that was and indeed still is on the futures options side of the fence. So we're going to talk ourselves maybe some energy, maybe some equities, maybe some metals, maybe, who knows, FX, crypto, ags. You never know who's going to make it onto the show. That's why you got to tune in every week. And joining me once again, holding down the old FTSE Russell hot seat again, I'm pleased to say he is in studio. Once again, my old friend, Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell, a.k.a. the man with the longest business card in the business. Mr. Sean, welcome back to the program. Welcome back to the studio, sir.
Thanks. It's good to be back in town, back in the studio, and always good to be here, Mark. Thanks for having me.
I enjoy having you in person. Not just I like seeing you, Sean, but also because whenever you come in, that means we're having delicious burgers, which means it's going to be a good day, going to be a full day on TWIFO, sir.
And we're full, aren't we?
I am full. So if we're a little logy, if we're in a little bit of a beef coma, listeners, during the show, you know why. We had delicious gourmet burgers from Au Cheval over here, which is a delicious way to start the show. Speaking of other ways to start the show, Sean, you think you know what I'm going to ask you now. Where should we begin our journey, to the upside or to the downside when we're looking at the big movers for the week?
We got to go upside, always.
I love it. The perennial optimist. Always. The perennial optimist speaks again. All right, let's go upside here. It's pretty much all energy all the time on the upside this week, Sean. Number 5 to the upside, so the bottom of the top 5. Again, this is straight up futures movement, no vol, no open interest change, nothing like that. You guys, as always, can play along, see these numbers and a heck of a lot more for yourself. CMEgroup.com/TWIFO, even /TWIO. Both of them should work, TWIO or TWIFO. And that'll get you where you need to be. But, yeah, number 5, heating oil, up 3.1%. Number 4, Brent, up 3.4%. Number 3, the Nikkei, up about 4%. And then number 2, Nat Gas, up 6.25%. And number one is good old WTI, up 6.5%. Now we go to the dark side. On the bottom of the dark side, which I guess is the place you want to be if you got to be there. Number 5 is corn, down 4% this week. Number 3, the old ultra, down about 4.3%. Numero trace here, silver. Silver taking a nice break here this week. Down almost 6%, 5.85%. And then we got Eurodollar is easing off a bit as well, off nearly 8%, 7.75%. And number one with a bullet to the downside, yet again, it's to the upside, to the downside. This thing moves like crazy. You've asked us about it before. We profiled it before. It's just not really an option story, unfortunately. It's iron ore, off 10.25% this week. So big movers, big shakers, a lot going on. Of course, the potential, dare I say it, Sean, the potential resolution to this trade war is giving a lot of interesting movement, a lot of lift, some product sell-offs and others. So, Mr. Sean, there's a lot going on this week. Where should we begin our journey this week?
This energy sector looks pretty interesting, being up so massively, Nat Gas and WTI.
Kind of hard to ignore that one this week. Yeah.
Why don't we go energy before we go into equities? My favorite subject.
All right. I know you like yourself some equities, but we'll give listeners a tease. We'll put it off a little bit because, yeah, it's pretty much the entire top 5 is, except for one, it's pretty much all energy. So we got to start there. Looks like, Sean, for a long time, this story in WTI has been, this kind of, every product obviously is the push and pull of demand and supply. That's kind of the basic economics of how it all works, but it's much more in stark relief here in WTI because you have this weakening global demand that has been pretty much the narrative for a while now, and most of this driven by the trade war. We have receding economies around the globe as well, also contributing to that. So that's weakening the demand side. On the supply side, particularly domestically here, when you're talking WTI, we had a glut of supply. So a glut of supply, weakening demand, hasn't been a strong bullish picture for WTI in quite some time. Maybe I go out there with a very cautious maybe that worm turn in this week. I said WTI up quite a bit here. Coming into the show now, we're at about a 57.35. So giving up a little bit of that upside here coming into the show. It was threatening 58 not too long ago. Now 57.35 puts it up about one little over a handle and change here coming into the show here. So giving up a little bit of that upside as it had a much higher move, up 6.5%. Let's see what's lighting it up out here. Vol obviously coming off quite a bit here this week, a good chunk, which is interesting. So people had priced in maybe a little bit of resolution to that trade war. We're also seeing, of course, these EIA numbers coming out and driving a lot of interest as well. But it definitely seems like the focus is on perhaps a renewed global demand, which is what's driving us up here. And that's been, the weak portion of the curve for so long. Vol off, pick your poison here. In the D's contract off almost 4 points. You go out to the weeklies out there, it gets off 3-4 points as well. Go out to Jan off 1.7 points out. So Vol pretty much crushed across the board, however you look at it. Let's see, the action out here was in the D's contract. Again, this proves what we were talking about last week, Sean. Remember, we had a listener ask us why won't people trade weeklies in WTI? And they will, as long as they're like a standard monthly contract, because we're seeing it here again. D's has 8 days to go, so it's a weekly, and it's traded 51% of the paper this week. So I think that kind of puts some ammo in my supposition that it's something mechanical behind the scenes that's keeping people away from these quotes. Is that what you think as well, sir?
It's interesting. I think traders are creatures of habit, and that's the case with product as well. I think it's a matter of taking a look, and liquidity is probably much deeper because of the inherent history in the product.
Yeah, people clearly will trade crude with a week to go. That's not a problem. I don't know what else I can do, Sean. I've asked everybody I possibly can think of about this. You think someone would have stepped up and maybe tried to fix this issue, but apparently it still persists because the week 2 and week 4 contracts around it did 0.4% and 1% respectively, whereas the D's contract, right in the middle there, the Goldilocks contract, 8 days ago, did 51% of the paper this week. So I don't know what else to tell you, listeners. It clearly is something, the devil is in the details, as they say, and definitely it's something up with the details here. This D's contract, it's got 8 days to go. I hate to parse it too much, but it did so much of the paper that we kind of have to. So take these skew numbers with a bit of grain of salt, listeners, because it's a week to go, so they're going to move quite a bit. But still, the puts were heavily bid last week, nearly 3% risk they had the money. This week, they're about even without the money. So that put skew, very flat right now, actually. And the calls were slightly bid. They were actually kind of pretty much unched last week as well. Now they are almost 1% rich. So calls getting a little bit of a bid, which is saying something. Of course, when the vol is this annihilated, it's going to maybe make those movements seem a little bit more outlandish, perhaps, as a result. Let's go to where the action was this week, and it was in the upside. It was 60 calls pretty much across the board here in DEES, but also out in Jan and also out in some other months as well. 60 calls. Number one with the bullet. The 60 calls in DEES were where the action was this week, doing about 21, almost 22,000 contracts this week. The lion's share coming yesterday, actually, 9,300 yesterday. Nearly 6,000 on the tape today and about 4,000 on Monday. Total of about, like I said, 21, almost 22,000. Slightly opening, so it looks like a lot of back and forth. And that makes sense. As we were rallying, starting to threaten that 60 strike, Sean, people were going back and forth. They were slinging on that strike. That makes a lot of sense, and we retreat back from it. Maybe they take some of that off. So a lot of paper out there. Then we go to number 2 here, double puts, 55 puts. Also makes a lot of sense. So we got a nice tight strangle / risk reversal out there for double puts, 60 calls. Both of those in D, 16,000 of the double puts going up. The lion's share also yesterday the big mover for WTI, 7,000 contracts there. And total 16,000, slightly closing about 1,000 and change out there. Let's look really quickly as I like to do. Let's scroll out a little bit, see if we see any funky prints, which sometimes lurk out here. You got almost 5,000 of the 70 calls going up out here in June of next year. So a little bit longer term bullish. So maybe the worm is turning out there, and that's not longer term enough for you or not far enough upside. We got June 2021, 75 calls, doing 1,500, 1,600 contracts this week. So a little bit of funky upside paper. Maybe that worm. Let me look a little bit farther out because I want to see one of the biggest narratives we've had on this show is the call skew here in WTI. Let's see if it has returned. Let's go to the contract. It has a little bit more time to go. Let's go out to Jan. Let's see. The puts out there last week were 6.4% rich to the at the money. This week they are 6%, so the puts kind of unched. And last week the calls were 3.5% cheap to the at the money. This week they're about 3% cheap. So not really a huge change out there. So those of you out there who have been looking for this narrative of the calls coming, the call bid getting a lift, not so much. I hate to really read a lot into a little bit of a lift in the DEES calls, but those only have a week to go. So you know me, I'm not a big fan of Parson skew with only a week to go. Speaking of, before we go on, Mr. Sean, I'm going to cheat again. We got a question here from Screamster. Going to bump him up. He wants to see, are you seeing a similar pattern developing in the options as well? And he points to an interesting article. I think this is from worldoil.com, not an outlet I'm familiar with, but this article mentions how crude production, this is according to the EIA and a couple other, and CFTC as well, crude production is shifting from the longer-term portion of the curve back to the shorter-term portion of the curve. And this article says the U.S. EIA reports that changes in the oil investment and production cycle may be affecting trading dynamics in WTI and indeed in Brent. They say traders and producers used to hedge many years in advance, and now they're flipping that script. Now they're shifting to within 1 year, so much shorter term. And they point to a ratio here, the ratio of open interest for WTI contract months 13 and longer. Again, this is just the futures list. This is not the options. He's asking about the option. WTI contract months 13 months and longer to within the current calendar year has declined since 2013. So the ratio of open interest for longer term versus shorter term has declined. So therefore, fewer longer term contracts. CFTC has published similar data that shows the open interest among longer dated WTI futures contracts is shrinking as well as part of the changing investment and production cycle for U.S. oil production. Most of the total trading volume for both Brent and WTI is for crude oil contracts in calendar months 1 through 12, so that calendar year, which obviously is the next calendar year of delivery. Only 5%, they say, the volume is for contract months 13 and longer. So interesting, Sean. I wasn't aware of that shift on the future side. We obviously look at the options every week, and the options, and it's happening again this week. 51% is in the DEES contract with 1 week to go. So the options have been short term for some time. I can't remember the last time we saw the preponderance of the paper. Said that 5 times fast. The preponderance of the paper going up a year or longer out there. So, Sean, is that kind of what you've noticed as well, having sitting on the show a few times now watching WTI? I think our options data has been backing this up for quite some time. That look at this week. I mean, the action is all short term in the options, sir.
It makes sense. I think producers of product usually go where their hedge is most liquid, and it's always in the shorter dated. So, out 12 months is probably far enough for the majority of the hedge that they need. But then again, I'm no expert in the crude space whatsoever, but it seems that liquidity is where producers would look to put on hedges.
But you're the first guy I call when I have questions about WTI. Are you saying I'm calling the wrong guy, Sean?
I'm always the right guy, and I always have an opinion. But again, it's just my opinion. Again, I'm not a crude expert, but happy to continue to add into the dialogue.
Let's go to an area where you are an expert, where you are my first call. I was just joking about WTI, of course, but let's go on over to equities land. It's been an interesting week out here, Sean. The equities, I should say, the trade war tide is kind of lifting all boats out here in equities land. You know, it's funny. I feel like we've seen this movie before now, Sean, over the past year and change of this trade war. Oh, the trade war is done. Let's rally everything about 1%. Oh, wait, it's not. This time we're rallying almost 1% across the board again with no real signed deal. In fact, we were just talking about on our option block show not too long ago that there's no ink to paper yet that this is a done deal. There's just optimistic chit-chat, in those diplomatic circles, which we've heard before. We've seen this in the movie before. But yet, it's not enough to derail the markets. Everything's up nearly 1%. The S&P was kind of the laggard, I think, up a paltry 0.75% or so. And, of course, all that green on the screen means red on the vol screen, listeners. Volatility down across the board. VIX down a handle from our last show, down to about 1240 or so. The volatility of volatility, as you might imagine, because it has been ebbing and flowing, is actually up because VIX has been moving. So VVIX is actually up, threatening 90, 89, up about a point from where it was a week ago. And our old friend RVX, a.k.a. the VIX of the Russell 2000, at about a little bit shy of 17, 1670. It puts it down right around 0.75%, Sean. So this is actually the first time in a while, Sean, I've been able to come here on the show and say that RVX is not unched. It's kind of been glued for a little while, but now this week it's coming off a little bit, sir. Is that your consensus as well?
Yeah, Russell 2000 has been performing rather well, so as the small caps rally, vol comes in. So, but it's come in less than VIX, showing that there's still Russell's still a more volatile and exciting trade.
Well, that's what we're seeing, right? It should be. It should come in less than VIX. It's supposed to be the more volatile product at the end of the day, right? Small caps should move a little bit. And is that kind of what you're hearing? I know you haven't been on your road. It's the rare 2-week appearance, I should say, for you here on the show. Usually you're in London or Singapore or Germany or somewhere else like that. So a rare week and change for you being here in Chicago. Yeah, I know you've been talking to the clients there behind the scenes. Are you hearing that kind of thing anecdotally as well? That's why they're coming to play in Russell right now, because of the vol side and what's going on out there?
Absolutely. It's a healthy move in the index, and it's a very liquid product at both CME and CBOE. So I think the trading community is really taking advantage of the fact that, one, the index is moving. Two, there's quite a bump in volatility. So there's harvesting opportunities. There's spreading capabilities in the options, and the futures themselves are an exciting trading vehicle. Lots of volume coming out of Europe still. Healthy volumes coming out of those European hours, those early American hours, and Asia's actually trading well as well. And open interest is growing, which is telling us that the market is an investable market. So it's really exciting to see all of those numbers continue to increase.
Well, that makes sense. Obviously, you guys have the parent of LSE over there, which is, of course, the London Stock Exchange. So they have a little bit of skin in that European game over there. So it sounds like they're doing their darndest to drive some European flow your way, Sean.
It's that, and it's also the CME's sales force in Europe as well. They're out there doing a fantastic job of bringing awareness of the product to their customer base there.
I thought it was your trip to Germany a couple of weeks ago. I thought that's what pushed you over the edge there.
I will take some credit being in Germany a few weeks ago. Yeah, I definitely was an evangelist to the cause there.
I saw all that German flow coming in after your trip there, sir. So that's all laid at your doorstep. Let's see. Actually, on the week, Russell 2000 is now up here, listeners. So a nice, strong move to the upside here. It's funny, Sean. Going into the trade war, right, which was, I don't know, a year and a change ago now. You lose track of how long it's been. It seems like it's been with us forever. But going into the trade war, the entire narrative was, Russell 2000, U.S. small cap. They don't care about that trade war stuff. It's not gonna move at all as a result. And we've seen what? Exactly the opposite over the last year and change. It has moved a lot of times to the beat of its own drummer, but it has moved all over the place over the course of all these other crazy macro things are driving the S&P, they're driving the NASDAQ, they're driving the Dow. Russell, A, moves to the beat of its own drummer, and B, moves a ton. I'm sure there's going to be a lot of case studies once all this trade war Sturm und Drang is complete, there'll be a lot of case studies of the various indices. I'd imagine Russell 2000, maybe that's happening right now at FTSE, I don't know. It's probably going to be an interesting analysis, I think, of how the Russell 2000 performed amidst a pretty much entirely macro story, Sean.
Yeah, I look forward to having Rolf Agather from our product research team back in here again and talking about the constituents of the Russell Index itself, because I think that there's a story there. There's definitely a story about what did I call them last week? Those gang of stocks. I think. And you
gang
that large gang of stocks.
Volatile gang of stocks. Yes.
Volatile gang.
I believe that became the title of our episode.
Did it?
Yes.
That's awesome. But Rolf does a fantastic job of explaining one, the constituents, how we reconstitute that index once a year, and those components are volatile for reasons and make up those swings in that index. So it's actually a tremendous investment vehicle, but also a very, very tradable one.
Let's see what's trading this week. Russell 2000 threatening the 16,000 level, 16,000, that'd be impressive. 1,600 level to the upside, 1597 coming into the show here, listeners. So that 1595 or so strike right around that at the money. So they're up about 6 and change handles here on the week. Vol, surprisingly, actually up a little bit out here, which kind of depends where you're looking on the term structure on the week. Obviously, net we're down. RVX coming off a little bit, but some bright spots, particularly longer term in the term structure here, as Vol actually creeping up a little bit in the at-the-money side, which is kind of interesting. Most of the paper this week looks like it's out in Dece with actually, again, flipping of the script. Usually I see 13.5 puts going up out in later next year, but not for size. The size prints this week are on the call side, 16 quarters, Sean. So once again, we're flipping the script out here. Listeners asked about it last week, about what's going on with the puts. I think we may have another question about it this week, but this week it's all calls, 16 quarters, so it's upside. Let's look at these are in Dece. Let's look at the skew here really quickly. And it looks like the skew is kind of flat, 16.5% bid were the puts last week, which is fairly rich, and the calls were about 11.1% or so cheap to at the money, and that skew seems pretty much the same this week. So, Sean, a second week in a row here where we've got upside calls in Dece leading the dance as opposed to farther out of the money and farther out down the term structure there, puts usually leading the dance, Sean.
Russell's been rallying, right? So I'm not surprised to see that upside activity. It's pretty standard, and the ability to write these calls is as vols come in are a nice trading strategy as well. I think there was a question about writing calls.
Do you want to cheat and get one of those? We can get one of those right now. Let's go do it.
Let's pull out a question.
Because otherwise we save them to the end, and we like to mix them in here and have some fun. Let's see here. Get a lot of those questions. We love these questions. Listeners, keep them coming. You know how to find us clearly. But if you have questions, keep those coming. We love to hear from you guys. If they're fun, we'll kind of intersperse them throughout the show, as we like to do here. Here we go, right here. LLJJ. Interesting handle. Sean, they want to know, this is kind of a frequent, not the ticker so much, but if these indices are clearly top of mind for a lot of people out here. LLJ wants to know, what are the tickers for the Russell 2000 buy right indices? These are the ones I think we were talking with Rick Rosenthal when he was on a while back, and I think we had some data from RMC on these as well. Clearly, they've captured the imagination of the listening public out there, Sean. So refresh our audience here. What are the tickers he's looking for?
Sure. Before I give you the tickers, just, you can always go to cboe.com and find all this information. It's really, really easy to find. The CBOE's got a fantastic website. But the buy right index is the ticker's BXR. There's a put right index as well, which is PUTR. And there's a weekly. We're talking about weeklies in crude. There are weeklies in all of these options as well, but the index on the put right weekly is WPTR. So those are three of the bigger ones for you to take a look at. But please, I strongly recommend you go to CBOE's website and take a look at the balance of the other option rated indexes.
And these overwriting, buy writing type indices have been popular ever since they created BXM with the S&P buy right years ago, right? And that it's just kind of taken off from there. And it makes sense. A lot of people like this trade. It's a popular strategy. I'm pretty sure these are just at the money puts and calls, right, Sean? There's no. Sometimes they get a little funky. They add a certain delta to the calls or puts, but these are pretty much straight up at the money calls and put writing, correct?
Yeah. Some out of the money is both ways as well.
Oh, they do. How far out do they get?
I would have to look, but I think they're 25 delta calls and puts.
That sounds about right, yeah. So, these are listeners. If you want to maybe approach these strategies, maybe for some reason you're intimidated by doing FTSE Russell options, or maybe for some reason you want someone else to do it for you, you want to trade a fund that does that for you or is linked to these, then these are the tickers you want to look at. Give them the tickers again, Sean, so they don't forget.
BXR is the buy right index. Then there's PUTR is the put right. And then WPTR is the weeklies on the weekly put right.
We did a fascinating episode a while back about not the Russell one, but the traditional BXM and then the put right, which are at the money calls and puts writing on the same index. You think they would be identical, and yet there was a marked difference between the put right and the call right. And we had a great episode. I think it was of our Volatility Views show back in the day, exploring the somewhat arcane mechanics of why that is. It has to do with opening quotations and everything else. So if you're knee deep into the weeds of how these products work, listeners, I encourage you. Check out the archives of Volatility Views. It'd be interesting to see if there's a similar thing for the Russell out there. I don't believe that is the case, so we'll have to dig into that. But there you go, listeners. You have some ways if you want to have some automated premium harvesting type strategies, and it seems like from your email, a lot of you do, then that's definitely the way to go. Speaking of the ways to go, Sean, where should we hang our hat next, sir? You know what we did forget, though, which is on the top 5. We got so excited with that question, we forgot about Nat Gas. And so let's go to Nat Gas here and pull that up. Again, listeners, that's in the energy. There we go, Nat Gas. Because that one it's another one, Sean, where every week, it seems like every freaking week we talk about Nat Gas here on the show. After going for quite a while, a better part of a year, I would say, without ever talking about it once, all of a sudden, we're all over Nat Gas. We're seeing reports coming out this week now from places like investing.com and others with very hyperbolic headlines saying cold weather, Arctic air, and low levels of natural gas injection are all just shooting this to the upside. They're saying the data doesn't matter. The data has taken a back seat to the weather. It's all about Arctic air and frigid tundra prediction, Sean, which is not good for us. I guess it's good for the Nat Gas market. As we mentioned, it was rally ho throughout most of the week. Coming into Showtime, it seems like it's given up some of its upside as well. It was up 6.25% at one point. Coming into Showtime now, we're seeing it up a little bit less here, but still a hot mover here this week, saying shaping up to maybe have one of the biggest bull markets, if not the biggest bull market of the year so far in Nat Gas, with huge money, huge stakes. They're saying riding on what they're predicting, an intense freeze, which I like this. I like hearing this, Sean, because, again, I'm contrarian. I think we talked about it last week when it comes to the weather predictions. When they're talking intense Arctic freeze, I'm getting ready to pull out my T-shirt. What do you think?
It's darn cold here, and it looks like it's not going to change for a while. So I'm not surprised to see this Nat Gas rally. But and it's not just here; it's the whole North America. So that's an interesting headline, but there's some validity there. Cold weather, Arctic air. I can see data taking a back seat to this freeze.
They made the opposite prediction last year. They said, it's going to be the mildest weather we've had, and look what we had. We had the cliche Chicago winter everyone dreads, but we only get like once a decade. The minus 30, the Siberia, schools closing, all that fun stuff. So they predicted the opposite of that last year. We got the opposite, and now I'm hoping this year it's the same thing. Terrible winter, a.k.a. it's going to be good. But that's not going to be good for the Nat Gas market, listeners, because it's up, and it's up again this week. Vol coming in a little bit, which is kind of interesting given the fact that it's moving so much. Remember, people have this misperception of vol is really only to the downside because it comes from the equities that way. But in commodities and most products, if things are moving, that's volatility regardless of the direction. And yet we're seeing vol coming in pretty aggressively here this week across the board. Also seeing, most of the paper, lion's share of the paper is in about the D's contract, which has about 2.5 weeks to go. And let's see, the 2.5 puts. So we're trading about a little north of 275 right now, about 278 out here in Nat Gas, listeners. So the 2.5 put is where the action was. Pretty far out of the money puts, going up nearly 30,000 times this week, 28,000 and change, almost 9,000 on Tuesday, 8,100 on Wednesday, about 7,000 today. The lion's share of that opening. So opening out of the money puts, Sean, with about 2 weeks to go, a little more than 2 weeks to go. 2.5 puts. That's kind of interesting. That's not exactly what I expected given all these. Of course, Nat Gas has been swinging, so we could get back to those levels, I suppose, by the time these contracts are all said and done. But still, I expected maybe something more bullish. This could be overriding. That could clearly be. But still, I expected usually in these kind of big moves, we see a lot of action on the call wing, and that's not the case here. Number 2 is actually the farther out of the money puts, 2.25 puts, going up 19, almost 20,000 times. The lion's share actually on Tuesday, about 8,000. About 6,000 today, 4,300 yesterday. A lion, good chunk of that opening as well. So opening puts, I think we talked last time, Sean, that may have been some verticals going up, the 2.5, 2 quarters. The OI doesn't line up precisely that well this time, but that might be some of the paper going on there as well. Now that I look at it again, I remember talking about that last time. It seems like there may have been some verticals. That would certainly explain why these two pretty far out of the money put strikes continue to dominate the paper. Hey, let me know if you're a size Nat Gas guy. Write in and let us know if that's fairly common, because we've seen that a couple of times now, or if there are some other factors at work out here. Let's see here. Number 3 actually are even farther out of the money puts. Let's go a little bit farther out really quickly. Out to Jan. The Jan 2 puts. 16,000 of those bad boys going up this week as well. So it's kind of all puts all the time here. 8,000 on Monday was the big day. 5,300 today. Slightly closing. So maybe closing a little bit in Jan. So far out of the money, mostly near-term puts. The order of the day here in Nat Gas, which is surprising. Let's look at the skew really quickly. We have over 2 weeks to go, so it falls within our wheelhouse here. Let's see. The puts last week were 1.5% cheap. This week, they're nearly 8% cheap. And the calls, 2.6% cheap, or rich, I should say. Now they are about 8.5% rich to the at-the-money. So the calls are where the bids are, but the puts are where the volume is, which is kind of interesting. Funky. All sorts of funky out here, which I think pretty much is what's going on in Nat Gas. Sean, I'll give you a couple of categories that we're lighting up this week. You get to choose where we go next. Should we go metals? Silver is having a big week, and also corn's having a big week as well. Where should we go next, sir?
Let's definitely talk about metals, but FTSE Russell is cross-asset class now. We're multi-asset. We're big in equities, but we're getting big in fixed income as well. So I wouldn't mind touching on the fixed income side of things as well.
So where do you want to hang your hat? There's a lot of things in the rates, sir. Where should we pull that drop down to?
I have to say that last week we looked at one option that traded over $250,000 in a day.
That was ridiculous.
One Eurodollar, not strike, but one option. It's just mind-boggling, the liquidity in Eurodollars. And again, I think there's a big move in euros, right? They're down 7 and
we can go back to Eurodollars.
Something percent.
Let's do it. Let's go back to Eurodollars. See, it all goes back to your old stomping grounds of Eurodollars, sir. And you're right. That paper, $250,000 in just one option, not even one strike. Not across both of them, just the calls. We did about $250,000. That's probably, I think that is more paper than all not in the equities, but take equities out of it. That is certainly more paper than we saw in Nat Gas and WTI combined so far. And yeah, we saw a big downside move this week in the Eurodollars. They were number 2 to the downside, off 7.75% here. Now let's see. Let's add, I always dread hitting select all, listeners, when I get into the Eurodollars, because it's just so much freaking paper is a technical term, but that's exactly what I'm going to do right now. And now it's completely shutting down my system as there's so many strikes. Here we go. All right. And once again, Sean, we see something similar. Eurodollars are actually still off. Looks like they're mitigating some of their losses now coming into the latter portion of the show here. And let's look where the action is here. Looks like it is in the D's 2019. And we're close. We're not quite there, Sean, but we're pretty close. Not quite 250,000 contracts in that 98 1/8 strike call, but I'm sorry to report to you only 192,000. So I don't know if this makes our bar to talk about, sir.
Yeah, it's not over 200,000. I'm kind of disappointed. No, I'm kidding.
The
volume is massive.
Yeah, the big month out here looks like it's out in March of 2020 here with 16%. Again, it's so much paper in every contract that there's not one month doing 50% of the paper like there is in WTI or some of the other products. It's 16% is the big dog out here in March. So that's where we'll go. And it's actually puts, 98 1/4 puts. We're at about a 98.0, almost 0.1 here in the Eurodollar. So 98 1/4 puts are actually in the money puts here in March. And they did a paltry 172,000. So that's actually our number 2 print here on the week here. And it looks like a lot of that was opening, a ton of that paper throughout 100. That's why these bring a smile to my face, Sean. They traded 172,000. They opened 108,000 contracts this week. That's just opening paper on this one put. It's almost unfathomable, sir.
It is. It's as I said, the volume in these products at CME Group are just mind-boggling. These Eurodollar options are just massive.
Give us a little bit of a hint. What are you guys starting to to add over there at FTSE on the rate side. What is coming up your sleeve on that front, sir?
I'd love to talk about various products, but as we talk to our clients, we're coming up with some cross asset type of product is on the topic, and more to come on that.
Maybe someday you and I will be sitting right here 6 months, a year from now, talking about 180,000 contracts in one call or one put in some esoteric new FTSE rates product. What do you think?
That'd be exciting to see.
That would be something. That would be a record growth rate, I think, for a new product. But hey, crazier things have happened. Yeah, 98 and a quarter puts out here in March, 172,000 contract listeners. Tuesday alone, 114,000 contracts going up in this bad boy. So the paper here is kind of over 82,000 of that was opening. 36,000 on Wednesday, 12,000 on Monday. A meager 10,000 going up today. Total of 172,000 out here. Let's look really quickly. The actual biggest print of overall was actually in the D's contract with 192,000 of the 98 and an eighth calls. And the big day actually was Monday, 84,000 of those. And those were only slightly opening, 16,000. So a lot of back and forth on that 98 and an eighth, which is pretty close to the at-the-money strike out there these days. So yeah, a lot of action. Let's look here. Let's go back to this month of March, which had most of the paper overall. Let's look at the skew, excuse me. I already said the vol is off. The puts were about 11% cheap to the at-the-money last week, I should say. This week, they're about 13%. So puts getting a little bit cheaper by about 2 points. The calls were pretty rich. Calls were about 21.25% rich to the at-the-money. This week, a mere 15.3%. So calls coming in, puts getting cheaper. So kind of interesting out there as the Eurodollar coming off a little bit here this week. Man, we could spend hours talking all things Eurodollar, Sean. But I do want to hit on silver, too, before we get to some more listener questions as well. And as always, the listeners always like to take us in some interesting directions as well. I'm sure they have some products they want to talk about as well. Let's see here. Silver, really quickly. Silver. Remember, silver's kind of been a surprisingly interesting story of late. Usually all the metal story is all gold. And we do have our buddy, Mr. Eric Norland. You guys asked about that research paper he did about the skew in the silver and gold and how it's kind of a bit of a contrarian indicator. Well, we got him coming in a couple of weeks to talk all about it. So all your questions you guys have been asking us about that paper, we'll get the answers straight from the horse's mouth in a couple of weeks. He's beaming in on European time just to make it happen for you guys. So there you go, listeners. Let's look at silver. I said silver was another big loser here to the week, giving up some of the gains it's had of late, off nearly 6% on the week, 5.85% coming into the show time. And it's still holding those losses, off about 5.5% coming into the latter portion of the show. Let's see here. The action was primarily out here in DEES, 46, almost 50% of the paper going up out here. The volume is going to come off a little bit here, Sean, so be prepared for this. 1,900 of the 18.5 call. That's a little bit less than 190,000, if my math is correct, sir.
By a zero, yeah.
a couple of decimal points separating those two. So yeah, silver nowhere near as active as even gold, listeners, but still, it is an option story. 18.5 calls were the big ones out there, which are, let's see, silver right now threatening 17 to the downside. So 18.5 calls are pretty far out of the money, and they did nearly 2,000 contracts this week. The big print yesterday with about 600 and change going up. So that was the big trade out here in silver. Let's look again. The vol coming in pretty hard. Vol coming in for nearly 4 points in this D's contract. So they are coming for this silver vol pretty aggressively this week, listeners. The skew, let's see here. 25 delta put, 25 delta call, 50 delta risk reversal as always. Let's see here. I'm in the wrong month. There we go. The puts were cheap. They were nearly 4% cheap to the at-the-money. This week, they are even cheaper, 5.6% cheap to the at-the-money. So vol coming in there on the put wing. The calls were nearly 5% rich this week. They're 10% rich. So calls getting a bid, puts coming in a little bit as silver continues to come in and the vol comes in. And you know what, Sean, we do have corn moving this week too. We have had some ags listeners ask for more ags. So I'm going to indulge them as well, because corn actually a pretty active. I had a listener approach me, Sean, and tell me try to convince me that corn, in terms of number of users, is the most active contract over there at CME. I have yet to independently verify that. And looking at Eurodollars, that's hard to believe. But in terms of number of participants, corn is the biggest dog on CME. You used to be a CME guy. Do you have any insight into that, sir, while I dig up these numbers?
I don't. On the commodity side, yeah, that's an incredible statistic if that's the case on the corn side.
I guess we have to trust but verify, sir. So we shall verify on that. Corn, certainly one of the more liquid when it comes to the ag segment here. Coming into showtime now, it's getting back some of that. It was off about 4%. Now it's only off a paltry 3 3/4%, listeners. So still giving up some on the week. Obviously, the ags, mostly beans, but the ags in general have kind of been ground zero for everything trade war of late. The beans market has been just decimated as a result of this. A lot of that volume having been shipped overseas. A lot of the farmers here not too happy about that. Would be interesting, Sean, if Trump had a primary challenger, how the Iowans how they would vote, given what's going on out there in all things ag right now. But we're not going to go down a political rabbit hole. Let's go down a corn rabbit hole, sir. Corn off about 14, almost 15 handles this week, right around that 375 strike, listeners. So south of that 400 level. The vol coming up quite a bit. So this sell-off obviously leading to a nice explosion across the board here in vol. The most action coming in the Dees contract, which has about a little over 2 weeks to go. So it's right under our benchmark there. And looks like the vol came in pretty strong there, but came back pretty strong there, about 4 points. So that's pretty aggressive. The skew, the puts were pretty much flat to the at the money from a vol perspective last week. This week they've come in a bit. They're about 3% cheap. The calls were about 2% rich. Now they are 4%. So calls catching a bid. And the puts getting cheaper as this sell-off continues out here in all things corn. Let's go out here to where the action was. Looks like it was, I said we're at about 375 in the at-the-money strike, listeners. It was the Dees 390 calls. Number one with a bullet here this week. Doing, let's see, about 20,000 and change. Pretty evenly spread throughout the week. Actually, the big day was today. 8,200. Then we had 4,500 each on Monday and about 3,000 on Wednesday. So today was actually the big day for corn, which, again, a lot of this driven by this trade war optimism, I suppose you can call it, out here. Number two with the bullet are then the 400 calls. So looking a little bit farther afield there for those. 400 calls doing about almost 15,000 this week. The lion's share also today, 7,000, and the rest kind of scattered throughout the week. Then we got a tie. 380 calls and 380 puts, both doing about 13,000 and change. And then around out the top 10, we've got 385 calls. So a nice, healthy call strip. That's kind of what I expected in Nat Gas, and we did not see that, which is interesting. And yet we have a sell-off in corn, and we're seeing a lot of upside call action and a lot of that opening, which is kind of interesting. Again, not what I expected, which is why I like to check in on the ags every so often. We could do more check-ins, Sean, but I think it's time for us to check in with our most important audience, the listeners. It is time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, we got a lot of you popping off here. We already got some of you on the show, which is always fun. Let's see if we can get a few more here. Let's go to our old buddy, Mr. Brandt, Mark Brandt. He's chiming. A lot of you chiming in on these crypto options forthcoming over there at CME. And Mark Brandt, he was chiming in on the CME's announcement that they're getting ready to launch options on Bitcoin futures in Q1 2020. And he just wrote to us and said, "Way to go." So yes, we will take that congratulations, Mr. Brandt, all the rest of you who wrote in, because you're right. That was clearly our doing here. Us bugging Tim, bugging Derek, bugging everybody else over there at CME. I think I asked them, I think the technical term is about 8,000 times when we're going to get Bitcoin options, when we're going to get them, when we're going to get them, when we're going to get them. So I think if for no other reason than to shut me up, they finally announced that they are launching these contracts in Q1. So I will take your congratulations, sir, because that clearly was our doing here on TWIFO as Sean falls over laughing from his chair. All right, let's keep on going. More crypto questions. This one comes from Options Game. He writes in a lot. Actually, he asked last week, I believe, about what we think, what we could expect from an implied vol perspective for these options. And we said then, it should probably shape up similar to what we're seeing on a lot of the other contracts out there on your Ledger X's and your Deribits, everywhere else where there currently is an established listed Bitcoin options marketplace. And at the time he wrote in when the vol was about an 83 or so, and that 1 month kind of at the money implied vol perspective. It's come off a bit now. If you're curious about those levels, again, I encourage you, check out our crypto rundown program. It's all about that stuff. In fact, we had the guys who are the keepers of the data this week. We had the SKU guys on. They have all that great data. So check out that episode. It's pretty interesting. But he followed up with another question this week. He said, just commenting on our answer to that about the vol, and he thinks there's definitely going to be a lot of arbitrage between the CME contracts and the other ones. That'll be interesting to see. Again, the CME coin contract, I should say, is a big beast. It's a 5x contract. I don't know how the others line up from a contract spec size, but I don't believe they are as meaty, to use a technical term, as the CME one. So that'll make maybe some of that swapping and arbing between them a little bit more difficult. But as we know in the marketplace, if there's money to be made, someone will figure that out. But it will be interesting to see how much liquidity aggregates around these, and this becomes the big dog from a liquidity perspective. It's going to have a lot of impacts, you're right, on some of these other products. So yeah, we agree with you, Options Game. We're looking forward to it too. I hope there is a lot of ARB, because that's just more stuff for us to sink our teeth into. Here we go. Michael Smith wants to know, do you guys have a link for an article you talked about for the algo quote volumes? That's last week, Sean. We talked about that one. It was about Eurodollars. In fact, the name of the article was Futures Exchange Reins in Runaway Trading Algorithms. I do believe, Michael, we sent this to you before the show, so you should have your link to it. But for the rest of you out there, listeners, we obviously can't send links to all of you. So if you want to find that article for yourself, it was called Futures Exchange Reins in Runaway Trading Algorithms. And Sean, remember, that was an interesting article. We see algos all the time bumping heads in various products. It happens in your space, the equities all the time, and happens everywhere. Not usually to the extent we saw there where it lasted for, I believe, the better part of a week. So that was kind of aberrant. Can you recall off the top of your head, Sean? I'm putting you on the spot here. That's why you're in the FTSE Russell hot seat. Another time where we saw algos kind of bumping heads for that more than an hour or maybe a day.
I have to say I don't recall this happening. I do know that, and I think I brought this up last week, and again, I am no IT guy when it comes to message traffic and how this goes through the pipes of the exchanges. But the exchanges have done such a great job of reducing the size of messages into more efficient messaging so that more messaging can get through those pipes. They've done a fantastic job, and I know the CME has done an extremely good job of this. But no, I've never heard of this ever happening before.
Have you guys encountered any rogue algos run amok in the FTSE space in your time there, Sean?
Not to my knowledge. I think single firms have had their technology issues, but I've never heard of two firms bumping into each other the way it was described here.
Yeah, that was, I think, protracted is the technical term out there. I guess someone wasn't going to budge. Someone wasn't going to blink. We're not turning my machines off. You turn your machine off. And so it just kind of went on until CME said, you know what? Both of you are turning your machines off until we get a handle on this. So check that one out. It's a fascinating read, listeners. Michael and everybody else who want to know about that one. We already talked about the Russell 2000 tickers. Sean, we are awash in questions this week in comments. Kevin Hunt, he was chiming in. I was talking about recently about gold moving north of the 1,500 level to log the highest finish that we saw in 5 weeks. I think that was on our last show. We were talking about that. He chimed in saying, it's India. India is the one driving up the prices. And you could very well be right, Kevin. We talk a lot with metals, with energy. A lot of it is Chinese demand, right? It's copper in particular, China. But he's right. We don't talk about India as much, and particularly for the precious metals. I know they have a large, jewelry demand scene over there for India. So is that something you agree with? Sounds like you agree with our friend Kevin, Sean, that it's India is to blame for surging gold prices. You heard it here first from Sean.
I wouldn't be surprised. India is a massive consumer of metals, especially precious, and I just happen to know that. Again, it's my opinion, but I wouldn't be surprised that India is at least part of the ingredient of that rally.
So we've established on today's show now, you're my go-to for all things WTI, of course, Russell, and now the Indian jewelry market over three things. Your knowledge is vast and broad, sir.
I think I have that nickname for me, Plethora.
Oh, I like
Plethora of knowledge.
The plethora of knowledge. That is the director of derivatives licensing. All right, we got more. I hope you're not done, Sean, because we got more here. This one comes from the creatively named YT197. I'll leave it to you, Sean. You like your acronyms. What the heck that means. But he wants to know, are the puts in RUT options more bid than the similar term puts in the S&P? That's an interesting, more bid. That's you could read that a lot of different ways, Sean. So maybe you give your thoughts. I'm going to pull up some data and we'll see if we can match it. How about that, Sean?
So what I'm reading in this question is more bid meaning similar strikes, similar, like let's say 25 delta puts. Do they trade at a higher vol than S&Ps? Do RUT options trade at a higher vol? Is there more skew in RUT options? And historically, the answer is yes, there is. There has been. I'm going to let you bring up some analysis here, but the answer historically has been yes. I think that those numbers have come in over the last couple of years, but there still is that opportunity to trade RUT put options with some steeper skew. There's no question about it.
I'm just doing a cursory analysis for you here. I forgot the listener's name. Some mess of acronyms. Obviously, we don't have a skew breakdown for the exact levels of implied and everything else. The implied in, let's look at a similar term. So let's look at DEIS for both. That's you talking about similar terms. So let's go out a similar length of time. I just pulled it up here in the FTSE Russell 2000. The at the money was around a 14 and change from an at the money implied. And let's look. Here's the skew. Now let's look at the similar term in DEIS here. In the S&P, obviously that's going to be cheaper from a vol perspective. That's about 11.6, but you're looking at the skew. So now this is where it gets a little bit subjective because these are percentages rich and cheap to the at the money. Let's see here. This DEIS contract in the S&P is, let's see, with 11% is 11.6% is the at the money vol out there. The puts are this week 26.5% bid. That would be something if they were cheap. Calls are their bid, 26.5% bids. That's pretty steep from a put bid perspective, and the calls are about 14.2% cheap. So the calls are in, the puts are pretty bid. We're looking at the DEIS contract here in FTSE Russell. The puts are about 16.5% bid, Sean, and the calls are 11.1%. So it actually looks like, and again, this is not an apples to apples because it's a percent of a percent, so it's kind of a bit of an obtuse comparison. I want to have a little bit more time to crunch them. This might be a good question to ask your product research team over there, Sean. We'll give you homework whenever you come on. You're gonna run away from coming on the show. You're getting all this homework, but still, it seems like at least in this DEIS contract, the S&P puts are more bid. That's surprising. That's surprising to you, Sean?
No, I think S&P has massive volume, so I think implieds could actually move to a much steeper skew at certain periods of time. And you've had quite an upside move in the Russell index itself, which brings vol in. But again, the massive volume in the S&P options don't surprise me that there could possibly be some steeper skew there. But then again, this is all great trading opportunities to trade one volatility against the other.
Great opportunities indeed. So I'm just pulling up Russell here again to see for sure. Of course, that music, listeners, means we've come to the end of it. Sean, it's been an hour. Amazing how fast it flies by here. Let's look here. Yeah, 16.5%, 14.75% is the at the money vol. And so they're more bid from a vol perspective in terms of higher levels. But in terms of skew, that's kind of interesting. I want to this is obviously just a cursory glance. I want to look at this more. This is an interesting question, Sean. Maybe, what do you think? Maybe we call up some of the product dudes over there, give them a little homework. What do you think?
Yeah, let's take a look at the skew for next week. That's a good idea.
All right, so we're going to put the FTSE Russell Brain Trust to work on it and see what the numbers. But this is why we like our listeners, Sean. They come up with this fun stuff. So this creatively named YT197. There you go. You got some interesting homework for us. Now, Sean, are you going to be here next week, or if you're not, then you give me homework?
I'm 99% sure I'm going to be here, but I also wanted to mention that it might not be a bad. I'm going to pull in the SIBO guys to talk about the skew here. It's their options, and they are the masters of their product. So I'm going to probably reach out to our friend Rick Rosenthal and do a little bit of analysis on this skew for us for next week. And maybe I'll drag Rick along with me, if that's possible.
Oh, and maybe if he brings
Might not
burgers,
be bad.
He's welcome to come. Have Burger will travel here in the Options Insider Studios. Well, unfortunately, listeners, again, that music means we've come to the end. We touched on a lot of stuff this week. We touched on corn. We touched on Nat Gas, WTI, of course, equities. We got into some silver. You guys asked us about crypto. You guys asked us about jewelry in India. All sorts of fun stuff. You guys were on fire this week. Keep those questions, those comments coming. We love to hear from you guys. You know how to find us. And Sean, if they want to reach out to you directly, maybe they have more questions like our creatively named YT197 does about S&P skew, about tickers for products, about the buy rights, about all the stuff they've been asking us about all show long. Where should they go? What should they do, Sean?
Reach out to me, smith@FTSERussell.com. Happy to answer any and all of your questions.
There you go. The man gave you his email. Make him regret it. Deluge him with all the questions you have about all this stuff. Tickers and skew and all that good stuff. And while you're at it, of course, if you want to check in on the show, in between episodes, yes, stuff happens over there at CME when we're not talking about it here on TWIFO. You go to cmegroup.com/TWIFO, TWIFO. That's where you get the reports. You can always find Blues and Eric's. I encourage you. Eric's coming on soon. Check out that article for yourself about the skews and the metals and how it's maybe counterintuitive to what you may think as a bit of a leading indicator. It's fascinating stuff. That's all there at cmegroup.com. And, of course, all the data, all the fun stuff they have cooking over there in the land of FTSE Russell as well. On behalf of Sean and indeed myself and our friends over there at CME, I want to thank all of you out there for downloading, streaming, subscribing, for sending in so many questions. We can do a whole question-up show. Maybe we will. Maybe we'll say to listeners, okay, you guys all want certain products. You guys write in. You dictate the entire show. What do you think, Sean? And then they could. Then they can't get mad at us. They can only get mad at themselves.
I think it's a great idea. Let's go with lots of questions. That actually makes the show fun and interesting.
All right, next week then. If you're going to be in town, you're going to be here next week. We will do an all Q&A, all listener guided episode. So wherever you want us to go, if it's fluid milk, if it's lean hogs, we will go there, listeners. So this is your chance. Get them in. If you're mad, you want even more corn, then tell us about it, and we'll see what we can do. And we'll see you back here tomorrow for Volatility Views, 1 p.m. Central, 2 p.m. Eastern. Then we kick it all off again on Monday with the option block and crypto, and we're back here again on Thursday for more of This Week in Futures Options.
This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.